What's going on? TK coming at you. Masterwealthbuilders LLC is the company, and what I wanted to do was talk to you about the components of insurance when it comes to family protection, in case no one ever explained it to you, or for educational reasons, in case you don't really understand the different products available to you in life insurance and their use case, right? So let's start with term. Term insurance typically is for 10, 20, or 30 years. And what I like to use term for is to cover all of your household expenses. So think about the cost of your house and all of your bills. Term should cover all of that and still have enough money left over so your beneficiary still pays everything, still has money left over. So number one, term. When you look at term insurance, it should be convertible, meaning that in year 15, if it's a 20, 30-year term, you should be able to convert it to permanent insurance. So you go from temporary insurance for a specific amount of time to permanent insurance. You can take the policy and convert it. And usually you can convert it to whole life, or you can convert it to index universal life. So that brings me to product number 2. So term is just to cover your expenses, total household expense to include your mortgage or the cost of your house. Product number 2, and these should be used in conjunction. So cover your expenses with term, then get a index universal life. Index universal life, IUL, basically allows you to have a cash value that accumulates. The longer you have it, the more your cash accumulates. Later on in life, you can take a loan against your life insurance policy, and typically your policy should be structured with diversity within the index that you participate in, or indexees. And also, you should have living benefits, a lifetime income rider, and the death benefit. So you want to build cash value. You want to use that as an asset that you can borrow against, that you can use as a credit reference. So an IUL is product number 2, or layer number 2. Your expenses is covered with term. An IUL builds cash value. It's an asset. Cash value life insurance is considered an asset, and it is a reference point in terms of longevity, right? That comes with living benefits. It comes with the ability to borrow against it. And those items are not available in term. Term does have living benefits, but it doesn't have cash value. So that's layer number 2. Layer number 3 is if you have an existing retirement product, an IRA, 401k, any variation of such. You have money sitting on the market. You convert it to off market because of the tax advantages that come with life insurance. You take the principal protection and the downside risk out of your investment when you switch it over. So you convert an existing policy that you have over here on market to off market. And you participate in a deferred index annuity, which allows you to convert and still contribute. And then that is another retirement element. That is another security that sort of, securitizes your life, collateralizes your life. It's another element that you have that can help you in the long run. So layer number 3 would be a deferred index annuity. And then layer number 4 is if you are a medium income individual where you earn $100,000 total combined income for the past 2 years, you can participate in the 5-year plan. The 5-year retirement plan allows you to take advantage of leverage. It allows you to earn more than where you can anywhere else because you pay into it for 5 years. The bank gives you a loan $3 to every $1 you put into it. Year number 15, they pull that money back. The loan is paid off. And then you have that policy again to lean on, to borrow against. It still comes with a death benefit, still comes with cash value. So that's the next layer, right? That's an additional supplemental thing that helps you in the golden years, something else that you can leave to your children, and something else that you can borrow against. So the 5-year retirement plan is layer number 4. Then layer number 5 is what we call final expense. Now, final expense is a smaller policy, usually smaller price, but it only covers death, burial, and it's usually somewhere around in the $50,000 range. So the difference between regular insurance and final expense is final expense usually pays within 24 hours of you submitting the death certificate, right? So it helps you with just handling the funeral. And usually there's a little bit of money left over to pass on to your beneficiary. So that's 5 different layers, and that's what we call diversity within your insurance portfolio. If you have all 5 layers, then you're totally covered in insurance the same way they tell you to be diversified in your portfolio on market investing. So this is off market. This doesn't have the downside risks because your principal is protected, but it very much is a situation where if you are serious about not GoFundMe, having these layers protects your family. It's a responsible thing to do. If you have thought about generational wealth, if you thought about succession, and you really want to protect your family, you want to do what the 1%ers do. If you really get serious about something meaningful in life, then these are the layers of protection that you should add as a part of being a responsible adult. It's just that simple. You can delay life insurance. You could say it's not important. You can put it off. But one day you're going to get sick. One day you're going to pass away. Whether you're prepared for it or not, that's totally up to you. But if no one has ever broke down the different available products to you, and if no one has ever explained use case, hopefully this video will inspire someone to get serious about something responsible that you should do as an adult. Because that's really what it boils down to. And just because 1%ers have always done it doesn't mean that regular people can just be thought-provoked to get to that level also, to get to that level of responsibility. If you want to work with me, my link is in the bio. If you're not comfortable working with me, then go see any licensed insurance agent.